Passive income is at its all-time high levels, and it has always been something that people dreamed of. Who doesn't want to watch Netflix all day and at the end of the day, when they check their account balance to see $50 in for the day? Sounds too good to be true, right? Well, if it sounds, it probably is. Many projects within the crypto space took advantage of this buzzword, and some of them managed to drive massive attention and a lot of money poured into their project, promising much higher APYs than the traditional savings accounts can offer. Moreover, the best hedge funds in the world can give you a return of around 10 to 12% on average, and not to mention that they have routinely negative years. Well, it's not too hard to imagine that most of these projects went to zero, and we should be very cautious with the ones that survived. However, when we talk about crypto passive income and staking, I don't necessarily refer to these projects that offer insanely high APYs that are obviously unsustainable, but to every project that offers this feature no matter the percentage APY. I highly recommend you to stay away from staking your coins in order to earn passive income, and in this video I'll try to explain you why. So let's go ahead and jump in. Crypto staking originally came from the proof of stake model, where instead of mining, people lock their coins in order to validate a transaction on the blockchain, and they get paid rewards for doing that. While this is a great way to eliminate the whole wasted energy that proof of work blockchains need, almost every project now offers staking, even though it has nothing to do with validating transactions. The founders of crypto projects saw an opportunity to incentivize investors to put their money into their projects, because they can earn passive income by just locking their coins. When someone sees a loophole and takes advantage of it, there's this massive wave of people who also want to get into and try to offer something even more enticing than its competitors. And that's how we get from 10-ish% to some crazy APYs like 1,000,000%. And this is just a marketing strategy, nothing more than that. I don't want to get into these extremely high APY DeFi projects because I hope everyone here already knows that they are not sustainable. And if you are not an early investor and sell at some point, most likely you lose your money. But anyway, in this video I'll try to explain to you why you should not stake your coins in general and how you can actually lose your money by doing so. Staking usually comes with a lockup period unless you choose flexible staking, where you can withdraw your coins at any time, but the APY you'll receive just doesn't worth your time of doing all that. Also, most of the time when you choose locked staking, you can still redeem your coins at any time, and the only penalty you'll receive will be the reward you are supposed to get. So for instance, if you staked your coins for 60 days and you are 50 days in, but you need to sell your coins or transfer them for some reason, you have the option to get access to your coins early, but you won't receive any rewards that you made so far. Also, the rewards are usually paid in the native coin of the project, and this makes the calculations on how much you will get as a reward for your staking in USD value extremely hard to predict. Some people actually prefer to be paid in the native token, as if the value of the coin goes up, you actually get much higher APY in USD value as of the time of staking. Trust me, I've been there and I know how much this can make you neglect the downside risk. Let me actually tell you something personal that actually made me think about staking this way. During the last bull run, I've staked every single coin that I could possibly can in my portfolio, and I mainly talk about during the second leg up. Back then, when Bitcoin broke above the bull market support band, that was definitely a point for the bulls, but when it went back down after a couple of weeks to test it and hold it as support, that was a huge indicator that we are back into a bull market. So like I said, I was holding my coins at that time and I didn't have any intentions to sell them anytime soon. So I thought it makes sense to stake them as I will hold them anyways. Like most of the people back then, I was also thinking that Bitcoin is gonna go to approximately 100k in the next couple of months before we go into the next bear market, which everyone knows is inevitable. That was not just what I wanted, but what plenty of indicators were suggesting is going to happen. Of course, when we peaked at 69k and immediately after we started to go downwards, I just thought that it is a small correction along the way, and you know, I was earning APY on my coins, right? I don't have to worry too much. But that was just on paper. Just to mention something real quick, during this period you could stake your coins at a very decent APYs, which they really incentivize you to do so. This, by the way, should be one thing to keep in mind if you want to identify where we are in the market. If APYs are going up, less and less people decide to stake their coins because they want to have access at all times and eventually exit the market. The further we go down, the APYs will decrease because more and more people will stake. So generally speaking, when you have plans to really hold for a very long time, like how it might be right now because of the expectations of a long bear market, the APYs you will earn is just simply not too high. On the other hand, when the APYs are quite decent, that's the time you definitely don't have to stake and pay very close attention to the market. And if I go back to where I left off, I didn't sell my coins when we were back over here, even though I was still on profit, because you know, I was earning APY, why should I? But if you actually do the quick math and find out how much you actually make in USD value, it's just funny. However, there was this project Terra Luna that came up with an interesting concept to pay its interest in stablecoin, where you actually end up making money and not just multiplying your coins, which they might drop in value and get almost anything at the end. And the percentage APY was also not something you want to miss out on. Around 20% APY for a stablecoin was definitely a deal, and locking in $100,000 would give you a $20,000 return for 1 year. That's what I can say is a true definition of passive income. But unfortunately, the better it sounds, the worse it might end up, and that's what actually happened. People locked up millions of dollars in UST, earning 5 figures every single month by doing absolutely nothing. The project was in the top 10 cryptocurrencies by market cap at some point, and so many people overlooked the fact that there's no way this can last forever. People literally lost everything, as the stablecoin turned out to be not so stable and lost its peg to the dollar, and it went all the way down sub 1 cent. This event was just so terrifying and painful to watch, but I think it will definitely make the crypto market better in the long term and make the investors much more cautious in the future, and that will naturally clean up the space. You should always remember that anything that comes easy in life is not gonna stay for long. Staking has one big benefit that adds to the project, and that is reducing the volatility and pushing the price up due to the locked coins. However, despite adding value to the project, usually the average investor doesn't get rewarded. You are just holding your coins in times like this one, where we've been unable to hold the bull market support band as support and drop below it, which was a huge red flag and a major indicator that we are heading to a bear market, and selling your coins at that time is a good idea. But instead, you are just holding because you are getting paid, right? You are here for the long run and not to day trade. And I agree to some degree, but people are panicking when we drop 80-90% and then they sell. You just have to learn when to buy, when to sell, and when to hodl. Some might say that it's easy to judge when we go back in time, but if you make a mistake and do not sell when there's no clear indication of which direction the market will take, do not make the same mistake again when you actually have an indication. I don't want to sound like I got it all figured out, because I was clearly underwater back over here and I don't hide it, but not learning from your mistakes is the worst thing you can do in my opinion. I recommend to everyone watching to stay away from staking and focus on the project's fundamentals and how much it can actually go up in value. If I take Hex for instance, Hex offers 40% APY if you stake your coins, and it's a lot more complicated than what most of the projects do. In Hex, you really lock up your coins and you can't redeem them at any time and just lose the interest that you earned so far. There's this feature called emergency unstake, where apart from losing the interest that you earned so far, you will most likely lose some of the original tokens that you've locked in, if not all of them. This really makes people who stake their coins leave them locked and not withdraw them. Also, Hex is one of the few projects where you can lock your coins for up to 15 years, and they incentivize you to do it by giving you a higher percent if you lock in for a longer period. Me personally, I would never do this, even if Bitcoin offers this feature. 15 years is extremely long period of time, and absolutely anything can happen. Eventually, if the project is still around, we will go through several bull and bear markets. You can make so much money selling around the top and then buying back around the bottom. If something happens, you can always liquidate your position and decide if you want to invest later on or leave the project for good. Locking for such a long time doesn't give you that option. And I'm not talking about 15 years specifically. Even 2-3 years is extremely high risky in my opinion. Again, I want to highlight that it's not risky because we talk about Hex. For me, it's risky for whatever we talk about. I'm a long-term investor and my time frame is not 6 months, but I want to have access to my assets at any time and sell them whenever I think is good. And even though Hedron gives some options to the people who stake their Hex, there's not so much liquidity on OpenSea, and if you manage to sell your Hex, it's very unlikely you'll get a good price. However, Hedron is quite complicated and still many people don't really understand how it works, so that's why in the next video I'll be explaining what is Hedron, how it works, and pretty much everything you need to know about it, so make sure you don't miss that out. But one thing I wanna mention about Hex is that only 20% of all wallets that hold Hex actually stake their tokens, so we have almost 470,000 holders in total and only 97,000 of them staked. But what is more interesting is that only 10% of the circulating supply of Hex is staked. So what does that tell you? That tells you that the majority of the holders don't wanna stake and most of the circulating supply is not staked. But why? Why most of the people don't wanna get 40% APY? That's just insane. Well, first off, the APY is 40% because of the small amount of Hex actually being staked. The higher the number of staked supply, the lower the APY everyone will get. But apart from that, why people don't wanna take advantage of these free tokens? Well, the answer is simple. No one's here for 40% return on investment over a year. You know, if you think of it, 40% might sound a lot, but it's a lot for a month or a week, not for a year. And especially that you might stake your coins when the price of Hex was up here above 10 cents, and let's say you staked for 1 year and the price is still somewhere around here below 10 cents. How much did you actually earn over the course of 1 year? Nothing, right? In fact, you lost some. And you might say, but if that's the case, I would lose money when the price goes down regardless of whether I staked or not. And you'll be right. If you act like your coins are staked when they're actually not, you will experience the same outcome that people who staked will. Meaning, if you don't make any changes to your portfolio, aka selling when you have to sell, you will lose money. As simple as that. And I'm not talking about trading here. Trading is losing. I'm talking about adjusting your portfolio to the market conditions. This is completely different than trading. If Bitcoin goes above the bull market support band, you wanna wait because it will eventually go back to test it. When this happens and it holds it as support, that's a bullish sign and you wanna hold your coins and buy more if you want. Buying or selling here is risky because the market can go either way. When Bitcoin starts to go down and it's unable to hold the bull market support band as support one more time, that's a bearish sign. Should you sell at that time? Well, I don't recommend you. We saw a couple more rejections during this period and that's also very bearish. But should you sell? Again, I don't recommend you. Buying or selling in this period is gambling simply because we don't have a clear indication of where the market is going. If you sell and the market turn bullish and eventually go for one last rally to 100k, let's say, before we go into a bear market, which we know is inevitable, you will miss those gains. And also, if you left some cash on site to buy the dip and you buy over here but the market does exactly what it actually did, you will lose this money. In this period, you just have to sit and wait. When Bitcoin went above the bull market support band here, I was just watching like a hawk and waiting to see what is going to be the next move. When we've been unable to stay for too long above the band and almost immediately went back below it, that was the sign I was waiting for. I lost a lot of money not selling during this whole period because it was not clear where the market is going, but at this point it was very clear that the market is going in a bear market, especially with these few rejections here. That was so bearish. If you didn't sell around this time, I'm sorry to say that, but you don't manage your portfolio correctly. Even if we didn't go to 20k that quick, which I'm actually surprised that we did, we were going to see these lows eventually in the near future because everything points at this direction. You wanna sell at the right time, buy at the right time, and hold at the right time. If you learn those three things, you will be so much ahead of your crypto game. You wanna wait for those big indicators to take action and not react to every single one, either for buying or selling. So with that in mind, if you didn't manage your Hex when you had to and just hold whatever happens on the market, you are just acting like someone who staked and locked their coins. You could be in a much better position if you sold your coins when you saw the major indicator for the market direction and buy at these lows a bunch of coins super cheap. How many tokens you will get if you staked your Hex and wait for 1 year, for instance, 40% plus bonuses for longer staking and this and that. Selling here and waiting can save you from an 80% dip, which you can buy and get much more tokens than what the stakers will get as rewards. And also, your portfolio will be on the green much sooner and you will make much more money because of your low entry point. In fact, Richard Hart always says that the Hex main feature is price appreciation and staking is just a bonus. Some people treat staking like it is its main selling point, and if you're a Hex staker and watching this video now, I don't want to make you upset and push you to end your stake or do some crazy stuff. That's not the purpose of this video. Everyone makes mistakes in life and we have to learn from them. I also don't want to discourage anyone who wants to stake their coins not to do so. This is just my personal opinion and experience and I try to explain it to you as best as I can. 40% APY won't won't make you rich, neither holding through highs and lows without buying or selling at the right time. I think Hex locked staking adds a decent benefit to the project as it makes the price less volatile, but of course the drawback is that creates inflation, which is something you don't really want in your project. So all in all, we might consider staking as something good for the project, but it's certainly not good for the people who stake. If you are a poor investor, meaning you don't have much experience and you don't want to make some crazy buys and sells because of the risk of messing up, and you just want to take the safest bet by buying at a certain price, lock your coins for a few years, get paid interest in the meantime, and basically get rich when your stake ends and sell everything at much higher price and much more coins that you originally had, well, I'll probably disappoint you, but this is even riskier. Like I said, I want to have access to my assets at any time and manage my portfolio in the market conditions accordingly. No one can guarantee that Bitcoin will be around in 10 years. There is a very high chance to be around in the next couple of years, but 10 years is a long time. And you know, this is Bitcoin. Many altcoins have a very short lifespan. Some of them do very well in their first bull run, but then they just die off. Some of them don't die, but they never reach the all-time high again. And investors keep the project alive, but they don't see the returns they expect to see, and the project slowly goes down in rankings, where eventually we might see it go to zero. And I don't want to scare anyone, spread FUD or whatever. The only thing I'm trying to do is an educational content and learning to navigate your hard-earned money as best as possible, because in this space you can lose them very quickly. And I just want to finish off with, next time when you stake your Hex, ask yourself why only 20% of the wallets stake their tokens and only 10% of the circulating supply is staked when you get such a great APY of 40%. There must be a good reason why. If you like the content, you can smash the like button to support my channel. Also, I don't have any plans to stop anytime soon, and if you want to stay updated, subscribe to my channel. You can always unsubscribe if you want to. Check my other videos that will pop on the screen if you haven't already, and with that being said, I'll see you next time.